Boom, we are alive, ladies and gentlemen. Thank you for joining us on today's episode. This is Tio and the Arcane Bear. A little bit late, but I had to drive to the city again to deal with some more paperwork. God, governments always make it so difficult to do anything, but can't complain. At least I'm well on my way to being a resident here of Costa Rica. Now, more importantly, we're going to be taking a look at Bitcoin, some of the fun things about how we got this far. You know, it's been a long time. It's taken us a while to get here. And I kind of want to start with something that was rather, nostalgic today. So here, hopefully everything's going smoothly. Be sure to give me the thumbs up and let me know that the stream is going well. And what I want to do here is I want to show you this. Boom! This is my Twitter account. Be sure to follow us on Twitter as well. But one of the points I thought here that was extremely kind of poignant, I guess, was the update that we had made 7 years ago. So this is the post I made on Facebook 7 years ago. Now, this is a postcard that I found on an indigenous street in Guatemala, a place that you can only get to by boat. Now, when I first found this, I had actually already bought Bitcoin at around 90 bucks, but this is one of the pivotal moments that I've talked about where I kind of realized that it was a choose your own money situation. We didn't have that yet. Now, we could make an argument that anything now in the crypto space can be a choose your own money, and that fact that it's not controlled by a government, not created by a government in itself is a huge step forward, and I'm very grateful for that. As I went from being the crazy random person that looked like a genius. Again, so I found this on a street in Guatemala, in a town you can only get to by boat. Yes, that's right. Where I was living, you could only get to by boat. This is a really unique moment, and this popped up in my feed today. Now, again, I believe I posted this earlier than, I found this actual postcard earlier than 7 years ago, but this is when I joined Facebook, and I shared it from my phone at that moment. So I think it was actually in 2013. I think I had found this postcard a year prior, and I finally got around to sharing the photo once I made it to social media. Anyways, besides the point, let's go back. We're going to just do another little historic thing here, and we're going to take a look at Bitcoin. Now, we've been watching this chart, and I've had this chart drawn up exactly the same since March. Now, you can go back and look at my videos, and you'll see this exact same chart drawn since March. Now, there are a few additives. These regression lines are important off of the top, and although we did have the earlier regression lines here drawn. Once we broke out of the first primary regression line for SOS, we just went massively explosive all the way up to the first SOS, to the first regression line. Ethereum is not that far behind. A very interesting story about Ethereum here too is a very similar pattern. Obviously, the long scale accumulation like we've been studying down here. And this nice big blow to the primary regression line here. One of the reasons why I've made a conjecture around 26 to 2800 on this kind of move up is because this is one of the final areas of resistance that before we get, at least compared to the all-time high. So now that we've broken the all-time high, there's nothing really holding us back from moving forward. So the title of this video is, Can Bitcoin 10x? Now, what's crazy is in this moment in 2014, I don't remember exactly what it was on this date, but I think it was something, we could look February 4th, 2014. It's probably I think this is actually pretty close to the Cyprus or the Cypriot explosion. So let's say somewhere between $700 to $900. If this moment 7 years ago, I had come to you and I told you Bitcoin was going to 10x, and that was just from $700, that would have been Bitcoin at $7,000 at that moment, roughly speaking, you probably wouldn't have believed me. So why would you want to believe me today if I say, hey, Bitcoin could go another 10x higher than here, right? I'm just some random guy yelling from the mountains 7 years ago, Bitcoin's going way higher than it is right now. Why does that make any sense? This ability to choose your own money is extremely valuable. Now, this is what peer-to-peer market and peer-to-peer money represents. It doesn't just have to be the one and the only Bitcoin. At least I don't think so, because that goes against everything that I've learned about decentralization, which means that there should be the choice of many. And it should be a voluntary choice of many, not just, oh, this is the only one you can choose. So, how do we get there? How does this boat of where we're at today potentially take us to much, much higher? Now, for those of you that have been following along with some of our charting for the last few years, you'll remember that when we get to a bull market, one of the kind of exciting things that happens is you start to be able to pull out these tools, which we don't get to play with all that often, which is your Fibonacci retracement and extension. So if we draw from the spring to the previous climax, you're going to see the first step, I think, where we kind of hit a lot of resistance. So I think we're going to run up to around 85 grand, and then we're going to get a big, chompy reaccumulation pattern, very similar to what we're seeing here. So I will open it up on a different chart here just so I can show the clarity, because to some degree or another, what we want to do is use each of these steps as an educational process, because there's an enormous amount to learn. And right now you have a sickness inside of the bull market. And one of those sicknesses is a lot of other YouTubers are providing you emotional content. And the cure for that sickness is education and confidence. And you get that through practicing and studying, right? So back here in 2014, I'm like, yeah, Bitcoin's going to 10 grand. No one believed me. Not at all. Not a single person can believe me. I bet you if you look back that the people that I was showing this to then would laugh, because like, oh wow, you were right. Like, notice more than 4 times higher at this particular moment than I thought, right? I was aiming I was like, yeah, 10 grand will go to next. Right, I just sounded like the crazy person. So now that I've gotten significantly better at market study and market analysis, one of the things I want to go and look more deeply at is the depth of understanding the basically market sentiment, right? So this larger reaccumulation pattern we're in right now is a very volatile area of around 30% for the reaccumulation pattern itself. And if we go back to this chart pattern we were looking for Bitcoin, I think we're going to get stuck around 85 grand with probably another 35% reaccumulation pattern. Now, why would I think that? Okay, well, back in 2017 when I started the Arcane Bear, it was March 2017, I think exactly March 1st, which would put us here. Now, some of you were living in Costa Rica, and you would have remembered me starting to yell from the rooftops that I was like, God, Bitcoin's at $400 or $500 again. Like, God, I've got to get into Bitcoin. No one listened to me. Nobody cared. So I was like, okay, well, I'm going to start a YouTube channel. This is basically March 2017. So right here, I think we're at, around $800. This is where we started. And the reason I did that is because, well, I figure people at least that are interested can find me. And if they care, well, then they'll listen, because I was tired of telling people that didn't care anymore. So I needed to find an outlet for people to be interested effectively. So I stumbled into YouTube. And if we look back at the previous SOSs, so let's measure from the box to the first SOS. Let's say this box range to here, you're at 250% out of the box before you saw a noticeable reaccumulation pattern. Well, where does that relate to today? Okay, well, this is a perfect question. And these things are really smart to do, is a kind of a retrospective analysis based off the same analogs that are relative to one another. Because yes, you can compare a tomato because it's got skin and seeds to an orange because of that, but they're not really the same kind of fruit, right? So we want to make sure our analogs are appropriate to one another. So here, if we measure from $10,000, which is effectively the same area when we were at $900, we're going to get a much better analog of this move. So let's measure that today and just see where we get to. Okay, to the top of the box, boom, 280%. Well, what happened here at 280%? So from our first kind of SOS to break out of the box, 240%. Well, what did we see? Lo and behold, a 37% bar before we started to see these much bigger gaps up. I think we gap up one more time to around $80,000. And then the next gap up is going to absolutely melt people's faces. And I think we go probably a few $100,000, maybe upwards as high as $300,000 Bitcoin. So let's find out how we get there. Okay, because this is based on a multi-step approach, right? So we saw that there's 2 previous reaccumulation patterns before the markets went absolutely ballistic. The first reaccumulation pattern outside of that box brought us up around 280%, which is what, if we measure again from today or from that break, was around 270, 230 to the first regression line. So again, this is our stepping stone to $300,000 Bitcoin effectively. So around 10x, maybe let's say $380,000 Bitcoin from here. And this sounded like pure hogwash and insanity to anyone who was back here. So let's take a look at 2014. Let's go back to the February date, because that's when I posted this, and mark off that. Okay, so February 2014, February 4th specifically, Bitcoin was at $600. Okay, so this is where I made the post effectively. I was like, okay, yeah, Bitcoin, like the future of money to change the world, right? Bam, right here. Now, when I got over here, I had done an enormous amount of market study, because I was like, why are we going down? Oh my God, what should I be doing? Like, is this the end of is it Bitcoin dead? No, obviously it's not. I actually started to accumulate a lot more in this area. I pretty much nailed phase D, which is by luck effectively. This time it was not by luck. So now that we look back retrospectively and we can use all of our analysis to our advantage, what we start to see again is that, okay, we're going to go over this a few times just so it sinks in. First run, 240%, followed by around 90 days in the backup phase here. So what happens if this backup phase takes 90 days? How far are we in this primary reaccumulation pattern? 33 days. So we're not even a third of the way through what it took the previous time we went up out of the box, up 200% and formulated a 30% reaccumulation range. So another 90 days would put us out end of March. Now, I've said numerous times, for better or for worse, speculatively speaking, that I think the real bull market is going to start around March, the middle of March. That would put us here. So if we get something similar, we'd see a run up into resistance, we'd see a breakdown up into the creek, and then we'd see kaboom, an absolute shout out to around $85,000 before we started to see our next retracement or our next basic primary area of reaccumulation. So one of the important things, and one of the most important things about studying, is so that you can increase the confidence so you don't get emotional. Again, remember that the disease and the sickness of like the average investor is that emotional, oh my God, it's going like $1 million. I'm going to go to the day. You got to remember the amount of time that's gone into this, at least 7 years ago. And I'm pretty sure I found this postcard earlier, but that's a different story. So how do we get to $300,000 Bitcoin, right? Okay, well, this is the first step up to 85,000. Here's where we form our next reaccumulation. I think we go higher again off that. So what we do is we take a Fibonacci extension or retracement tool and we bring it to the top of this regression line where we're at now and bring all the way back down to the spring. So these are the stepping stones to 300,000. We go from this area next afterwards, and this brings us to 170,000. So probably a big backup phase here where you jump around between, let's say, 160 and $130,000 Bitcoin. And let's measure that spread. It should be around 30%. Yeah, let's say 20%. And then after that is when we had the crazy chaotic moment. So if we follow anything similar to the 2017 pattern, what you're going to end up seeing is that this next step, which is again going to be based off our current price point, the previous price point down to the spring. This is where we get to $300,000 Bitcoin, right around here. And this is where I suspect we're going to see a blow off top, where it's just absolute madness. So one of the reasons why calm and confidence is so important is because to get from here 7 years ago in 2014 to get to where we are today is a pretty arduous process. It's not swift. It doesn't happen overnight. And you have to kind of make it through a fair amount of difficulty. And you have to be extremely confident about what you believe in to get to this point. So here we are way back in February 2014. And again, I bought my first while they were around $90. It was in 2013, I believe. I'd have to double check. We were buying them just for servers, but that post specifically was somewhere around here. I remember because I was in Guatemala between 2013 and 2014, and I don't think I joined Facebook until 2014. I'm like a slow learner or something. Anyways, the point of this, these two areas of reaccumulation represented a move of approximately 400% outside of the box before you saw the absolute sheer ridiculousness of what a bull market in a liquid coin look like, which is another 250% above that, right? So if we measure from the box to the top, it's an 1800% move. Now, for instance, Cardano has already done that. Band has already done 8500%. And more importantly, what we didn't have back in 2013 was a hugely budding and growing ecosystem of billions of dollars moving in and the trust that it takes for that type of money to be here and to stay here, which again probably going to drive us much higher. So if we measure just conservatively speaking, we'll make an estimation of the same outside of the box precipitative event. We go from that $10,000 mark. There's 1,300% up at 1,600 or 160,000. Jesus. This is kind of crazy, hey? And then 3,500%. So it's a little bit moonshotty and kind of fuckboy or something to say $300,000. But it's not totally out of the realm of precipitation. And more importantly, if we look back at some of the other aggregating factors, the massive decrease of liquid supply of Bitcoin is going to increase the volatility to the upside. Now, this is important right? Bitcoin, I don't think is the be all end all. I think Bitcoin and Ethereum are sexier together. I think you need loans and smart contracts and subscription services. You need to rebuild the entire financial ecosystem, not just, oh, we've got money solved. That doesn't really fix everything. You've got an enormous amount of other problems out there, and anyone who's a maximalist is really kind of silly at this point, because what they don't know how to do is just measure gains of the venture capital sector. Now, as a venture capitalist, you don't want to ever get married to an investment. You want to consistently look for innovation. So one of the unique parts is if we measure just plain and simply from the spring of Bitcoin to where we are now, you've got around a 10x gain. Let's say you joined in March, right? That exact spring, and you measure that same spring from Ethereum to where we are today. Actually, let's hold on. Let's make sure we get this measured up here correctly. Move this kind of atrocious drawing I'd put in here. You measure from the bottom of the spring for Ethereum now, and you're sitting at approximately 1,800%. So at this moment, from March to date, Ethereum has more than doubled Bitcoin, or almost doubled Bitcoin's price gains, right? So there's no reason to be an occultist this late in the game. It doesn't make any sense. You should be here to look at innovative technology and the interest in voluntary money. And I don't give a shit if it's Bitcoin or Ethereum. If someone wants to accept Ethereum to pay for the house, that's peer-to-peer money, baby, and it's voluntary. It is by choice. Anyone who's arguing as a maximalist doesn't understand the base concept of decentralization of money, which means you should be able to choose. If you want to use Litecoin, great. If you want to pay in dirty socks and someone's willing to accept it, great. This is a technological evolution. So stocks don't really fit that, but at least be open-minded, because all you're doing is missing out on potential gains. So I'm very excited about the potential and the future here, but don't get lost in the day-to-day. The previous bull market for Bitcoin, if you were to look back, was a ringer, right? Let's go back to this moment here when we went from like $190 to $1,000 and take a look at a retrospective study even further back in time, seeing as we're kind of, I don't know, that Facebook thing popped up on my feed today, so it reminded me I should be should be interested in it too. So what do? Well, we're studying Wyckoff phase analysis, aren't we, ladies and gentlemen? And I'm sure already as I get closer and closer, some of you will be able to recognize the importance of what we're looking at here. We take our box, we measure it out, and I gotta take that off there. We take our box, we measure it from volume wick to volume wick, basically. We measure out the bottom here, and lo and behold, what do you start to see? This beautiful horizontal trading range that formed. Here was your spring, almost categorically, right? Here's your buying climax, your shakeout, your automatic rally, your secondary test, boom, spring, test, LPS, and then boom, here's your backup phase. And from that backup phase, at approximately $200 at that moment, let's delete some of this green so I don't have too messy of a chart. But again, you can see the strength of these horizontal trading ranges from the backup phase itself. Again, what did you have? Oh, only 600%, right? And what about from here? What about from the spring itself? 1,500%. So if you got in Bitcoin at $70 and rode it to the high, you'd be at the same percentage gain that you would have had you entered Ethereum to today. And that's, again, important to remember, because yes, we love the technology. We love that there's voluntary money, but a lot of us are showing up here specifically because that active portfolio investment allows us to increase our wealth. So first and foremost, guys, remember that wake up in the morning, be grateful for what you have, call your loved ones, write down all the things you're grateful for, like your health, the view that you have, the work, your kids, whatever it might be, because that's really the most important stuff. Like if you ever do ayahuasca, you get the chance to have a near-death experience. None of what goes by your mind is, oh my God, I had so many dollars in my bank account. That is absolutely not at all what goes through your mind. So please be focused on the gratefulness for that much deeper version of wealth, because ultimately it's much more long-lasting, and it's a much deeper appreciation of life. There's a lot of people that have a lot of money that are extremely unhappy. your focus should be on look how small that run from $200 to $1,000, from $200 to $20,000. And then the same thing is going to happen here. This $20,000 run, as we go up to the hundreds of thousands of dollars, is going to start to disappear in history. And just like our post from 7 years ago when Bitcoin was at just a few $100s, part of the understanding here, what really sold me, is that this was a choice. This was a voluntary choice in money that we did not have before. And again, to kind of back up Elon Musk, it's not really about the technology. For those of you that would like, Memetics is a great study here, Memetics, just for fun. So people, I don't know if many of you guys know this, but the word meme comes from a study of memetics. So memetics is a study of information based on culture by analogy with Darwinian evolution. Proponents describe memetics as an approach to evolutionary models on cultural information transfer. Memetics describe how an idea can propagate successfully, but doesn't necessarily imply a concept is factual. Critics contend that the theory is untested and supported and incorrect, but we can go much deeper. Please read the book Snow Crash by Neil Stephenson, highly suggested. It has also been labeled as pseudoscience by many scholars, but so making memetics unable to establish itself as a recognized research program. But the deeper history here is you can take a version of, let's say, the societal software that we install. Well, this culture versus this culture, and the way that they view the things that each one of them does is drastically different because of that cultural information transfer, effectively. So the ability to transfer information via the internet in a meme is probably a much older theory around how we transfer information culturally to our children. And money as a voluntary choice is something that we have not had before, aside from like, oh, hey, we're going to use these tokenized forms of gratitude in shells or in cacao, and understand that the human species has been here for a really long time, probably a fuckload longer than you would think. And because of that, this idea of money in itself, especially the scarcity of energy, is kind of ridiculous. That's a much longer conversation. But more importantly, understand that memetics, the information wealth transfer that's taking place, for me, when I was sold, it was only about my choice. Changing money to change the world was I could choose that money if I wanted to. If someone wants to accept Litecoin, great. That choice in itself is what makes this valuable. It's what makes all of these forms of money more valuable. They were not created by a government. They're not controlled by the government. And that should be one of the most poignant aspects of all of our conversations around understanding this technology. Not getting caught and divided and further breaking down into tribalism about who was right about what coin. And that's kind of silly. And you sound like a fucking monkey. Well, we probably are monkeys, but that's a different story. I at least recognize that I have the downfalls of being a monkey. I have pitfalls built into my psychology where you can easily persuade me to do something just with simple little text and information to begin with. So if you happen to be an adventurous person, do you consider yourself an adventurous? Do you like to learn new things? Go down to the links, arcanebear.com/private, and sign up for our private group. We have over 500 plus active subscribers, and we go over fantastic ideas like this in our private group all the time. So I'll take a closer look at Ethereum here next, and we are going to go over the charts on a much more close basis. Here we go. And let's go down to the 4 hour because I think we're going to get that sexy vision. Yes. So there's a few of you that joined the live stream last night. I cut it off early just because I was having a little bit of technical difficulties. I believe we just saw our SOS and we are about to witness our backup phase. Now this backup phase is going to be super important because it's probably going to do this, something like this, and then just fucking explode, ladies and gentlemen. And Link is not that far behind, but more importantly, now that we've seen the SOS, yay, Tio was right. Thank God someone who's been here in the market for over a decade has gotten better at this because they've devoted their time to study and educating so you can remain calm and you can remove yourself from the sickness that is the emotional dangers of being a new investor. Because what we're trying to do is save you hundreds of thousands of dollars by following some pretty simple educational processes. Because chances are, if you had got back in Bitcoin way over here, you probably still wouldn't be around. And there's a reason. It's because the markets are designed to shake you out. They do that through a number of ways by running up and then smashing down and then running up and then smashing down again. And they will do it far past our lifetimes. Okay. So Ethereum here is looking great. And more importantly, I think what's going to be fun here is Link as conjecture, because yesterday I deleted the live video from last night because we just weren't getting the viewership. And it's probably because I went online and it was offline and it was kind of made a mistake. I do believe what we're seeing here in Ethereum is going to come, or sorry, in Link is going to come back down and touch the touch this regression line one more time like this, boom, before really exploding. And again, you can see the similarities here between Ethereum in this this breakout pattern versus Link here, which is in another form of this kind of this breakout pattern here as well. Now, this is also why you don't want to follow pattern traders, because they'd be like, oh my God, it's a rising wedge, it's a bearish thing. Be very clear that when you know where you are in the market, that you can recognize the macro perspective, this whole story, that you can overwrite these small term changes in bias. Because yes, although a rising wedge can be a bearish term, it really depends on where you are in the market. We're not at a bearish spot in the market. So try to ignore that and try to ignore anyone who thinks otherwise. I know it's kind of a difficult part, but listen to less people. You're going to do much better as an investor if you learn to listen to less people. That's just a super smart move in general, because then you'll have your own confidence and choice to make. So I want to go over Aave as well, as Aave was a wow. And this is the fun part, is once you see something go, I guess you don't want to, you want to be here. Okay, here's another perfect example of that rising wedge. It came to the top, it did its backup phase, and then it's gone absolutely ballistic since then. Now, I'd be a little weary up this high. I'd be taking profits depending on how I'd entered. Some of you guys had called me and asked about Aave profits. Again, I think the best conjecture would be to have a stop loss here so you don't lose any profits. But more importantly, when they're starting to go up this high, wait for the new trading range to form and then put a stop loss, not financial advice, below the trading range, like with a significant enough gap that you could take like a 15 to 20% spring off that trading range and not get moved out of your price. So I would maybe even move my stop loss. Now, this goes out to someone specific, two people specific, because they asked and they only... Look, guys, if you want to have longer consultations with me, because part of the private group, you guys get 15-minute consultations, definitely pay for the hour, because 15 minutes is not enough time for me to share anything of what I think. That's what I realized. So although you get free 15 minutes, like you have a serious question about how to manage portfolio, definitely go pay for the hour, because you're going to barely get anything out of me in 15 minutes, because I'm just going to go, yeah, focus on rebalancing your portfolio. That's all I can say. That's like the smartest thing I can say in 15 minutes, right? Anyways, keep that in mind. So Aave here is looking, that was such a beautiful blowout. And again, this is what I think we're about to see in both Link and Ethereum, is that once we get out past these horizontal trade, or these rising wedge trading ranges, you probably see a backup. If we're lucky, we'll get a backup here in Ethereum that comes all the way back down inside of the wedge to some degree. So if we're lucky, we'll get something that does this. And then we're going to $2,600, and we may be even going a load higher than that. So anyways, that's today's episode. Thank you guys all for joining us. I really appreciate your support, your effort, and your love. Remember, if you're watching this episode and as you sit there right now, be grateful for what you have. And if you're adventurous, remember to join the Arcane Bear private group, because one of the best things you can do in the bull market is not lose money, because this is one of the easiest times to be making money, and it's by having the confidence to be in the market. And there's a lot of people that will scare you out of your positions. They'll try to sell you leverage. And yeah, if you use a 10x, you get a 100% gain and blah, blah, blah. And before you know it, you're losing money in one of the easiest times to increase your portfolio wealth. And until the clear day that we see a massive amount of supply, the liquid supply change, come on this market, I'm going to remain ultimately very, very bullish. And we have not seen a single day of supply come onto the open market yet, not a single drop. It's been leaving. And until it comes back in these big chunks, we are going to be very, very bullish. This is Tio with the Arcane Bear. Thank you all for joining us this evening. I will, wait, hold on. Someone at the private group made us this as well. So I hope you guys enjoy it.